system is set for number go up. That's what debasement of currency does. When you have an over-indebted system, the collateral of the system, the assets, can't go down, because if not, you've got too much debt versus the assets, and that's what happened in 2008. So the whole system is based on that. The baby boomers are all going into retirement. You can't let the assets go down, because if not, they've got all the wealth. So therefore, consumption will collapse. The number can't go down. So as opposed to number go up, you could say the number can't go down. So the liquidity cycle is just an element of that. It's the actual mechanism by which it happens. If you're 30, you should just use any weakness to keep buying more number go up assets. For others, it then becomes a cycle to try to take some risk off the table, because it's a volatile space, particularly in crypto or technology investing. Both work well. But then you come to the question is, and most people get to this, is everyone thinks, yeah, I'm going to take money off. And then you're like, and where am I going to put it? Because as soon as I take it off, debasement's happening again. So you might put it in stable coins for a bit. Sure, definitely cash in lifestyle chips. Buy that house. Do that thing that you want.
Raoul Pal, CEO of Real Vision, predicts that the global liquidity cycle will propel cryptocurrency prices. Currently, macroeconomic liquidity sources abound, influenced by upcoming U.S. Federal Reserve monetary policy decisions. Historically, crypto markets have surged during such liquidity upticks. While 2020 saw unprecedented volatility due to the pandemic, periods like 2016 and 2012 were also notable for liquidity-driven increases in cryptocurrencies and technology. As autumn approaches, typically a period of heightened market activity, liquidity tends to peak before winter corrections set in. Paul is presently heavily invested in Solana, alongside smaller meme coins and other cryptocurrencies. He finds the Solana Bitcoin and Solana Ethereum cross charts particularly compelling. His strategy is straightforward. Maximize returns by owning assets poised for significant growth. With a 6-year horizon to capitalize on this unprecedented macroeconomic opportunity, Paul advocates embracing technology and cryptocurrencies. He views this asset class as the best performing in history over short periods, making it a lucrative investment. Paul emphasizes inclusivity in this global democratic asset class, encouraging individuals worldwide, whether in the Philippines, Nigeria, or New York, to invest 10% of their income. This approach, he argues, democratizes wealth creation in what he deems the hottest asset class of all time. In Paul's view, Solana stands out as a coin poised for substantial ROI in 2024. For those interested in staying informed on crypto developments, subscribing to Real Vision's channel and liking their content is recommended.
If we apply that thesis that there is no diversification, everything's correlated, you want to own the best risk-reward asset. If you go too far out the risk curve, you're early stage, you don't have network adoption effects yet. So I have made a lot of money in the last cycle by switching from Bitcoin into ETH. I had switched because I saw network effects of ETH were growing fast. It was NFTs that really ramped it up, plus DeFi. And so an earlier token with less adoption, that's gaining adoption, goes up faster in price. That's just how it works. So I thought I was going to be all ETH this cycle. I had a bit of Solana, and I'd observed a couple of things. This space is about narratives first, primarily about the narrative. I had been then watching the chart of the Solana ETH cross in the same way I do the NASDAQ Bitcoin charts. And it was basing, and I'm like, you know, this could break out. And I've got a thesis, this is the retail chain.
Raoul Pal has identified Solana, not Solana, as one of the top altcoins he is most bullish on, riding the wave of its expansive ecosystem. He believes that the upcoming 2024-2025 bull cycle could mark a transformative period for many altcoins, particularly Solana. Analysts have highlighted Solana among the top altcoins poised for substantial future growth. Paul specifically touted Solana as a prime altcoin to buy ahead of the next bullish phase. Currently ranked 5th by market capitalization, Solana has made significant strides since its humble beginnings, trading as low as 0.5 on May 11, 2020, before surging to an impressive $260 just 8 months later. Its widespread adoption among projects, developers, and users has solidified its position, particularly in markets like NFTs, DeFi, and the metaverse. Despite recent fluctuations in Solana's price and trading volume, analysts remain optimistic, attributing such movements to typical market dynamics amid ongoing ecosystem development. They foresee Solana igniting the next bullish cycle, potentially reaching new highs, with price targets set around $200, representing a substantial increase from current levels. Paul advises investors to reassess their allegiances from previous cycles, advocating for a pragmatic approach focused on maximizing returns. He highlights the impact of an Ethereum exchange-traded fund, or ETF, on the broader cryptocurrency landscape, anticipating significant price rallies if such a product gains regulatory approval. The staking dynamics of Ethereum, where approximately 30% of its supply is staked, further tighten supply dynamics, potentially amplifying price increases due to heightened demand. Looking forward, Paul underscores the importance of understanding risk cycles in cryptocurrency investments, noting that while Solana currently presents reduced risks compared to earlier stage tokens, early-stage investments carry inherent uncertainties regarding adoption and market acceptance.